Right now, the conventional wisdom says that the cell phone business has peaked, hence the seemingly endless weakness in Apple and every one of their component suppliers. But as much as the market views these stocks with fear and loathing, I think we need to take a more considered approach. And not just because Apple's got a new iPhone coming out this fall, at the same time that a great many people will be eligible for upgrades from their wireless providers. Just look at a company like Skyworks Solutions, SWKS. It's the maker of high-performance radio frequency and analog chips for smartphones, but also for tablets, for cars, GPS, broadband, and wireless networking, not to mention various industrial, medical, and military applications. But mainly, Skyworks is seen by the marketplace as a play on cell phone components, particularly for Apple. And the stock has been absolutely annihilated lately, down more than 25% year-to-date, off nearly 50%. That's right, 50% from its highs last summer. In fact, it hit a brand-new 52-week low just today. Still, here's the thing. Skyworks just reported less than 2 weeks ago. The company delivered a nice 2-cent earnings beat off a $1.58 basis, higher than expected revenues that increased by 15% year-over-year, gross margins expanding by roughly 470 basis points. Those are good numbers. And while management indicated the next quarter might be a bit light, or at least lighter than usual, thanks to weakness at a major customer. Wonder who that is. I have to wonder if this stock hasn't already been punished enough, and that's the way you have to look at it. Let's take a closer look with David Aldrich, old friend of the show, the chairman and CEO of Skyworks Solutions, get a better sense of how his company's doing and where it's headed. David, welcome back to Mad Money.
Hi, Jim. How are you? Thanks for having me.
Oh, good to see you. Okay, David, commenced volume shipments of telematics solution at Volkswagen. First mass production vehicle communication sockets, GM. Won multiple sockets flagship smartphone platform, Samsung. Launched IP security camera solution, Nest. I could go on and on. These are 2016 highlights. When will they mean more than one particular customer and that customer's window where it's not making new cell phones?
Well, thanks. That's a great question. So what I think you know, we were an early mover in taking and deploying technology that we perfected in cell phones and in Wi-Fi and connectivity into a whole host of IoT applications and vertical markets. So we're in the home, we're in Nest thermostats and smoke detectors, we're in Google and Roku entertainment devices, we're in light bulbs. We're continuing to round out our portfolio. And the value is the same, one and the same with our cellular customers. They're operating over multiple frequencies with lots of different communication bands, and we're able to simplify that with our scale and with our breadth of technology, make it easy for the consumer and easy for our customers to integrate all the technology. It's about 25% of our revenue today, and it's growing sequentially. It's growing year over year, and it'll continue, we think, to outpace the market to become a larger and larger component of our business.
And how do we get the story, other than in your unbelievably great and transparent deck, that you're a play on gaming, 20 hours per month, right, streaming music, standard def video, high def video, think HBO, ESPN, and then 4K video, Netflix. You may be the best play on Netflix other than Netflix.
Well, I think, thanks for saying that. I mean, we are in Google devices in the home, and we're in virtually every high-speed streaming entertainment device, gateway inside of the home in the enterprise, and then all the devices that are knitted together. And the complexity of knitting all those different solutions together in the home, whether it's your speakers or your television or your security monitoring systems, is they're all operating over different frequencies and in different modes. And Skyworks, better than we think anybody in the world, is able to simplify that in concert with our customers, make it affordable, make it small, make it consume less current, and I think equally important, drive high speed, reliable high speed. And that's going to continue to be a big piece of our business.
Well, you mentioned something important to people at home. Extending battery life is something you guys are really pioneering, correct?
That's correct. And the beauty of this is we didn't wake up one day and say we want to be an IoT player or we want to be in smart automobiles, vehicle to vehicle, or in the connected home or machine to machine. We're basically solving the problems that we've had to solve with our cellular and our smartphone customers for these new companies who are entering the space, entering markets that have never been connected. If you look at an automobile today as a rolling hub, all of the devices and the connectivity is something in which we could play a major part. So we went from having very little relevance in an automobile to it being a very big piece of our growth story. That's one example, and it'll continue.
Well, David, I mean, sometimes I think, we're sports fans, that it's almost like you're the Patriots, okay? The Patriots, we just presume they're going to win the Super Bowl. And then they don't win the Super Bowl, and you know what? Suddenly they're beatable. They're not that great. Von Miller can beat them. One player can beat them. I feel like that something happened here where your stock went up a lot, you became the Patriots, and then when you didn't win the Super Bowl, they had to cut you in half. I mean, I don't know how else to analogize this situation.
Well, clearly we're not immune, Jim, to some of the dynamics. We've got a large customer who's working off some inventory, and we're going to feel that in the March quarter. We felt it in December. But despite all the consternation in December, the worries with China and so on and so forth, we delivered revenue that was up 17% year over year, earnings that were up 30% year over year. We are now a 40% operating income company with growth that's far in excess of the market because we're playing in the right space. We're in mobility. We're in connectivity, and we're increasingly in vertical markets that are going connected for the first time ever. So I think that as we've become more important to our end customers, we're seeing great deal. We have more visibility now into the second half of 16. We're going to have a terrific second half of calendar 16. We're going to have to work through some inventory correction in March, and investors will eventually see beyond that, I think.
Well, one last question, Dave, because we've been around for a long time, both of us. When the company was in trouble, you came on and said the company was in trouble. This is certainly not the situation now.
No, it's not. And, our midterm model was to pass through $6 of annual EPS. Our midterm model, 1.5, maybe 2 years, is to get to $8 in EPS. And so I think the numbers will speak for themselves. We'll grow faster than the market. We'll do it in a careful way. We're quite conservative in how we manage our operating expenses. We're now moving into the low to mid-50s gross margin. And there aren't many companies, Jim, that are growing 15 or 20% a year with 40% operating income.
No.
We haven't missed a quarter, and we haven't missed a quarter since the meltdown of 2008. We're proud of that. We're conservative, but we're also very aggressively going after the right markets: mobility, connectivity, the IoT, the connected home, and the automobile.
Well, David, look, you keep delivering. I think the stock got too high. What can you do? That's certainly not your fault. Now the stock's gotten too low. David Aldrich, CEO and chairman of Skyworks Solutions. Great to see you, sir.
Great to see you. Thank you, Jim.
Right. Stock's come down a lot. I mean, look, somebody bought it at 120. Now you're buying it at half that. I mean, give me a break, will you? Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.